We are jumping straight into Hut 8 today. I mean, everyone is watching the price action, especially the gut-wrenching volatility. But if you only focus on that ticker, you are absolutely missing the real story.
You really are. The real story here is the company's dramatic, transformational pivot.
Right.
They're moving away from being just a pure play Bitcoin miner.
And becoming what?
A diversified energy infrastructure platform, and they're targeting the biggest structural trend out there, artificial intelligence.
And this isn't just some glossy marketing shift, which, we see all the time.
No, not at all. This is a deep operational and financial reengineering. And understanding this pivot is the absolute key to valuing the stock right now.
So what's the big tell?
It's that massive $7 billion lease deal with FluidStack, a 15-year revenue lock-in that fundamentally reclassifies the company, at least in the eyes of long-term institutional money.
Exactly.
You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us, learning what truly matters beneath the daily headlines.
If you're enjoying the show, make sure to subscribe and hit the like button. It really helps the channel. And definitely let us know in the comments which stock you want us to simplify next.
All right, let's unpack the core investment thesis here. We have a company showing just undeniable volatility, but at the same time, it's delivering, enormous execution on its strategy.
Right. And the question for you, the learner, is whether those execution wins are strong enough to overcome the short-term noise from its crypto past.
So where do we start?
Let's start with the financial performance. The numbers tell a story of momentum that, frankly, the market seems to be overlooking. Hut 8 just reported Q3 2025 revenue of, $83.5 million.
That's a 91% year-over-year increase. That's huge acceleration.
It's massive. But like you said, the market still treats it like a volatile asset.
So we need to strip away that daily digital asset noise.
Precisely. That's why we have to zero in on adjusted EBITDA. That's where the real story is. It reached a stunning $109 million.
And a year ago, just $5.6 million. So that reflects a massive, dramatic expansion in operating profitability.
Okay, so just to clarify for everyone listening, when you focus on that adjusted EBITDA number and sort of downplay the GAAP results, you're stripping out the mark-to-market volatility from their Bitcoin holdings, right?
You hit the nail on the head. GAAP results get skewed by non-cash adjustments from Bitcoin's fluctuating value. It can mask the real operational strength. That $109 million in adjusted EBITDA, that confirms the core business is stabilizing and accelerating no matter what Bitcoin's price is doing hour to hour.
And they beat on revenue estimates, too.
By almost 25%. The operations are strong.
Okay, so that leads us to this structural advantage, the moat. Because every company with a server farm is calling itself an AI infrastructure company now. Hut 8 has what's being called the power-first advantage. What does that actually mean?
It means they control the single scarcest resource in the entire AI build-out, cheap, reliable power. Right now, Hut 8 controls 1,020 megawatts of operational capacity. That's across 19 sites.
And they have more under development.
A massive amount more. Another 1,530 megawatts under development.
Wow. So if you add that up, we're talking about a runway to, 2.55 gigawatts of total power?
We are. And to put that number into perspective for you, that's enough power to run a mid-sized American city.
So they're not just renting server space?
No. They are building foundational, utility-scale infrastructure for industrial AI. It's incredibly difficult for competitors to replicate that kind of land and power control quickly.
So the strategy is basically arbitrage. Convert low multiple energy assets into high multiple AI compute assets.
That's the thesis. And this power control gives them flexibility, their dual revenue model.
What do you mean by that?
Well, unlike a pure miner or a traditional data center, they can dynamically allocate their energy. They can shift between AI and HPC workloads and crypto mining, just depending on which is more profitable at any given moment. That optionality is a huge advantage.
Okay, let's turn to the financing, because this is, I think, the most sophisticated part of the whole pivot. They need a ton of capital for this 1.5 gigawatt expansion.
A huge amount. They claim to have $2.4 billion in total liquidity.
But the really strategic piece is their Bitcoin reserve,
That's right. As of Q3 2025, they're holding 13,696 Bitcoin.
which is worth, what, north of $1.2 billion at today's prices?
And they use this reserve not just as an asset, but actively as collateral to finance this build-out at very favorable rates.
But wait a minute, isn't that just trading one risk for another?
Yeah.
I mean, if they're using Bitcoin as collateral, what happens if Bitcoin's price drops 50% overnight?
Yeah.
Don't they face margin calls?
That is a fair and critical question. But the rates they're getting suggest the risk is well managed. They secured that funding at an 8.2% weighted average cost of capital.
And that number is key.
It is absolutely key because it's way lower than the 10 to 12%, maybe higher, that traditional data center operators would have to pay. It gives them a huge competitive edge in funding their expansion.
And the proof this is working is, well, it's the huge infrastructure wins. You mentioned the $7 billion FluidStack deal, and we can't forget the partnership with the AI lab Anthropic.
And those contracted deals are what the institutional investors are watching. FluidStack is basically a broker for cloud compute capacity, and the fact that Google is backing that 15-year revenue stream, it de-risks Hut 8's balance sheet for the next decade and a half.
This isn't speculative revenue.
It's long-term contracted cash flow, and that's why you're seeing firms like Northern Right Capital Management and Tactive Advisors just loading up. It's cluster buying.
Okay, that bull case is compelling, really compelling. Top-line growth, expanding EBITDA, a resource mode and power. But I keep coming back to the daily chart. I see these massive double-digit swings. My gut still tells me it's a crypto stock.
And that's the biggest risk. The risks really center on three things: historical association, execution, and governance.
The association first.
Despite the pivot, the stock is still highly sensitive to Bitcoin's price, so you get those wild daily swings you mentioned. And that acts as a psychological anchor for investors.
And it's not just the Bitcoin volatility. There's this significant association risk from their corporate complexity. I'm talking about the spinoff, American Bitcoin Corp, ABTC. That thing collapsed. It plunged over 85%.
Yeah, that ABTC event is a huge headwind. The market is penalizing that complexity. Even though the core Hut 8 assets are strong, the power plants are safe, that ABTC situation acts as an anchor on sentiment. Investors want a discount for that complexity.
Okay, then there's the execution risk, the long timelines.
Exactly. These are huge utility-scale projects, the first data hall for the big Riverbend site.
The cornerstone of that $7 billion deal.
Right. It's not scheduled for commissioning until early 2027.
That's a long time to wait.
It is. And any delays could seriously disappoint investors who are focused on near-term returns.
And finally, the governance overhang. There's an ongoing fiduciary duty investigation.
Right, by Helper SEDA. Now, this is a risk of perception, not a direct risk to the assets. The power plants are still there, the contracts are still in place.
Yeah.
But this uncertainty, it keeps the big mutual funds and pension funds on the sidelines. They have strict mandates, so that keeps some capital pressure on the stock until it's fully resolved.
So we have a company positioned for huge long-term growth, but dealing with short-term volatility, complexity, and these long execution timelines. What are the specific milestones? What should we be watching for in the next 3 to 6 months?
The next 3 to 6 months are absolutely critical for proving execution. You need to watch two major areas. First is the Q4 2025 earnings release. We expect that in late January, maybe early February 2026.
And what specifically are you looking for in those earnings?
We need to see continued strength in revenue and adjusted EBITDA growth, of course, to show the momentum from Q3 is real. But crucially, investors will be looking for detailed guidance on the 2026 outlook. We need updates on Riverbend, on the 1.5 gigawatt expansion, specific timelines.
That Riverbend progress is vital.
It is the absolute core of the bull case. So throughout the first quarter of 2026, we need to see construction milestones.
Like what?
Updates on site development, equipment procurement, finalized customer deployment timelines. Any positive movement on that front will be a material catalyst. It lets the market focus less on Bitcoin.
And what about other partnerships? They landed Anthropic.
That's the third potential catalyst. Given their success and the desperate need for AI compute, any announcements with another frontier AI lab or a major cloud provider, that would be a game changer.
The market would have to re-rate the stock at that point.
Immediately. If they prove they can replicate that high-margin contracted revenue model even one more time.
So that's the lowdown on Hut 8 for today. We've seen a company rapidly transforming itself from a volatile crypto player into a structural part of the AI infrastructure build-out.
It really is a company built on a powerful dichotomy.
The structural moat is there. Power control, low-cost financing, it's clearly strong.
Right, the market knows the potential is there, but now they have to prove they can manage the complexity and deliver these massive projects on time. That is the gap between the potential stock price and the current reality.
So the final question for you to mull over is this. If the company successfully executes on its 1.5 gigawatt plus expansion, and if it secures just one more major AI hosting contract in the next 12 months, will the market finally be forced to ignore the Bitcoin volatility and the governance concerns and re-rate the stock purely for what it is becoming, a high-growth, power-constrained AI compute provider? That's the decision point investors are facing today.
We'll keep tracking those milestones for you.
If you haven't already, make sure to subscribe so you don't miss our next breakdown. We'll catch you on the next one.